All right, what's going on, everyone? There seems to be some confusion around trading with statistical approach, what a statistic is, how to use it, how to apply it to a real-time price, etc., etc. So this video is going to kind of go over all of that, right? We're going to look at some stats. We're going to talk about them. We're going to look at a strategy I saw posted the other day. We're going to walk through all the code of how the strategy is generated so you can see it is fully accurate. And then we are going to show you the performance on it. So first and foremost, what am I even making this video about? NQ Stats is a free website, nqstats.com. I've just posted some metrics that I use in my trading. This particular one of question is IB. There's a video here you can watch. But this data samples from 2014 to 2024, looking at New York IB 9:30 to 10:30 Eastern. 96% of the time historically, I'm going to say the word historically a lot for a reason. 96% of the time historically, IB has broken before 4 p.m., before the New York session closes. 83% of the time before noon. What side will break? So if IB closes above the midpoint, right, 81% of the time historically, breaks occur to the upside, and 74% of the time breaks occur to the downside if you close below the midpoint. All right, what about the highs and the lows set first and last? That's getting pushed around X a lot. It is true that when IB was set first and the high was set last, 79% of breaks occurred to the upside and 73% of breaks occurred to the downside, vice versa for the short factor. When you combine these two factors, so close above the mid and low is set first, 86% of the time historically, breaks to the upside, and 85 breaks to the downside, vice versa for opposite conditions. What that looks like is just here on the chart. Now, what is this all being posted about? Well, there was a post by Mr. Zink here, and this is not a hit piece. I do not know this guy. I do not care about anything he is doing. I just saw this graphic depicting a strategy. This strategy is highly unprofitable. Here's a 5-year backtest. He claims that it is not by posting this backtest, but then other people in the chat are saying he trades it in a different way. It's not mechanical. He doesn't trade it this way. If he does not trading it this exact way, then what's the point of posting this graphic would be my question. But in this graphic, it shows the low set first, the high set last. IB closes, pulls back to the mid. You go long, you set your stop at the low and PT at the high, doing a 1-to-1 RR. This is highly unprofitable. I don't care what this backtest shows. This backtest must be adding in other factors or some type of conditional logic that is adding context to the strategy. It's not just buy or short the mid. This is what you get in the past 5 years if you buy or short the mid. He is claiming since January 2025 that you get this nice equity curve. That is not the case. So let's take a look at the example code. So first we're going to establish some custom enumerators that we'll need throughout the strategy. It's basically creating a drop down over here when we look at the strategy settings. So public enumerator, we're going to set IB conditions value to mid, sequence, and both. We'll talk about those here in a second. We're going to create some custom variables. We're just going to initially define them. They're all going to have values of nothing until we put values in those variables. Variables just being like a box. So we're creating like a name on a box, and then we'll fill it with information later. On state change. So when the indicator is applied to the chart, set defaults. If the state equals set defaults. So when we apply this indicator to the chart, it's just going to set all of these baseline settings, right? So we want to calculate on price change. What that means is the on-bar update method, right? This on-bar update method is going to calculate everything in the bounds of this brackets every time price changes, right? You can set this to bar close or on tick change, whatever you want it to do. I'm just going to put it on price change. So anytime the price changes, it's going to calculate all this. That way we're catching everything in real time and not having to wait for a bar close. All right, so that's just setting the defaults So when we go into on bar update, this is the meat and potatoes of the code. First, we need to define what IB is. That is set initial IB highs and lows. Bar value equals bar value is a variable I'm setting to catch the bar period value, right? So in NinjaTrader, if you look here, this is the 930 open, right? This first candle, big volatile candle high right there and the low down here. If you look at the time, it's 9:31. NinjaTrader uses bar end time as the bar time. TradingView uses bar start time. So on TradingView, you would see this candle as 9:30. On NinjaTrader, you're seeing it as 9:31. So in order to reference time in NinjaTrader, you could use bar time, but I like to use date time objects because I think they're more efficient when coding larger scripts. But one nuance with that is that if I want to reference the 930 bar using a date time object, I have to say 930 plus bar value, which would be in this case +1. So it's going to say 930 plus 1, which is 931. So at the start of IB, we're going to set variables high and low, and we're going to grab the high and low values. We're going to update those later as code progresses. So as the code progresses, and we are moving through the, time is greater than or equal to 930 open, and time is less than or equal to 1030 close, we're updating the high value to any time the high breaks the current IB high value. So it's catching it in real time. Every time a new high is set, it's logging that high into that same variable, and it's catching the high time. So we want to record the time that happens because we'll be using that later. And vice versa for the low. And we're also actively calculating the mid as this is happening and the IB close as this is happening. So all the way up until 1030 when IB closes, when it closes, we will have the high, we will have the low, we will have the mid, and we will have the close. All right. So that is defining the IB. Now, setting the expected break. Looking back at the NQ stats data, that's what this is. So for mid conditions, right, we want to see if IB closes above the IB mid, then high expectancy break equals true, vice versa for the low. If we change the filtering conditional logic to sequencing, then IB high time is greater than low time, IB high break expectancy true, vice versa for the low break expectancy. And if we combine the two, that's what this logic is. If the IBC, which is it's IB conditions, right? If it equals both, then IB close is above the mid and IB high is greater than the low time. High break expectancy equals true. So we're just defining we're defining conditions based off of these stats right here. Midpoint, high versus low, combined factors. We're putting that into code. That's what all this is. All right, now entries. Entries is pretty simple. So if the time is greater than 10:30 and the time is greater or less than or equal to 4 p.m., so the New York session close, if at any time the IB high is broken, right? So if the high breaks the IB high, or double bracket means or, the low breaks the IB low, then IB broke equals true. So we're going to catch that flag that the IB has been broken. Now, into the entry logic. If the IB has not been broken, and let me open up this real quick, and one trade is not true. So anytime a trade is made, right, post market condition or position market position does not equal flat. So anytime it notices a long or a short, it's going to update this to true. So as long as IB hasn't been broken, and as long as we haven't already taken a trade today, and as long as the position is currently flat, then if we have a high break expectancy and we are above the mid and we pull back to it, we're going to enter long, and vice versa. If we have a low break expectancy and we're below the mid and we pull back up to the mid, we're going to enter short. That's defining your entry logic. And we're just using 1 micro, right? So standard size across the board. That's your entry detection that I've already discussed. Now for exits, if we are long, market position equals long, then I'm going to set, since we're entering on the mid, right? That's what the entry logic was. We're pulling back, entering. We pull back, like just like this depicts, right? So the IB, here, let's go to strategy. We'll set this to both. Re-enable on this sim account. So the IB low was set first, the high was set last, and IB closed above the midpoint. So now post IB hasn't been broken yet, and we are coming down from being above the mid. We come down and we tag the mid, it goes long, just like it was told to. And it immediately sets a stop loss at the low and a PT at the high. You can see price trends up and you get a PT at the high in this example. This is just showing mechanically that what we've coded works. So back into the exit logic. So you have the long, long exit logic, you have the short exit logic, and then we're also going to say, a minute before at 3:59 p.m., 1 minute before New York session closes, just terminate any open positions, right? We don't want to be holding past close. So that's just a time constraint, right? We're just going to close it out. We're not going to hold through the close into the next day. So we're going to say, hey, if it gets to 1 minute before close, just close this out if it hasn't been broken already. So those are your exits. Now, all those flags that we created, we have to reset them. So at 9 o'clock each day, before IB even starts to form, we're going to set all those flags to false. All right, user inputs, there's only one. That is the IP conditions, the IBC. So it allows me to drop down toggle between the different conditional factors. That is what IB conditions right here in settings. You see IB conditions, both. So that's this. We're just set to both right now. As we run through this, we can see on price change, we'll enable it here. Fill orders if touched. So I'm just making it as even unrealistic as possible, right? Just because price touches your limit order doesn't mean you'll get filled in real time, but we're going to tell the strategy, you go ahead and fill us, even if we just touch it. Like maybe in a real market, you wouldn't have got filled if it just touched to the tick and reversed. But in this code, we're going to say, just fill us anyways. Slippage, I'm not adding any. Entry per directions, we're just going to do 1. And that's that. So apply. Now mechanically, you can see it's working. We'll move over to a red day. That was a timed out. Let's see. Let's see if we can find here's a red day. Oh, where'd it go? All right, there you go, red day. So the high was set first, the low was set last, and based off of Mr. Zink, we're going to say just the sequencing because that's just calculating the high was set first, low was set last, yada yada. So we're just going to use that logic only because that is what his strategy graphic depicts. So the high was set first, the low was set last. IB hasn't been broken yet. It pulls back. We go short at the mid and just immediately get stopped out. So now you can see the code's working, longs are working, shorts are working, everything's working as it should. Data series, we're looking at the past exact 3 years from current date to 2023, past 3 years. So what does this strategy performance look like? There you go. That is what it looks like. As the past 3 years. If you want to look at it on a per trade basis, there's your per trade basis. If you want to look at it on a daily basis, there's your daily basis. So while it might be profitable the past few months, coming out of January, sure, it looks decent. But when you look at this over the course of a long term, it's not profitable. That is using solely the logic put in as we've just defined it, right? So that script we just created, here's the profit for the last 3 years. Not very good. I would not say this is a consistently profitable strategy by any means. There's like, what is this? It's gonna tell me the date. Yeah, there we go. So from January, February, March, April 2023 to pretty much the bulk of the year of 2023 was just big drawdown and then climb out. Going into 2024, it ran up and then fell down. Going into 2025, ran down and climbed up, and it just is not consistent. That is the entire code as it's depicted in this graphic right here. Now, some other people have been saying, well, he doesn't trade it that way. Where is it at? Somebody said he watched the live stream, right? It's like a guy in his chat or something. He watches the live stream, said, in the live stream, sometimes he enters before the close or after the close or yada yada. Okay, that's fine. I'm not saying there's not a way to trade around this and it be profitable. But if you're just going to use it as depicted, right? So if you're just doing this right here in the graphic, this is the performance you're going to get. I just walked you through the entire code. There's no way around it. That is the performance. If you have any questions, let me know. And take care.